Okay, we're going to continue with adjustment number 3. Furniture was depreciated by 2,000. What is depreciation? Depreciation is allocation of cost for non-current assets for this accounting period. So if you look here in your trial balance, you have to find your furniture. Where is your furniture? Okay, your furniture, okay, is 25,000. This is the value of your furniture, 25,000. And you already have accumulated depreciation of furniture, 6,000. So this is the cost. This is the accumulated depreciation for furniture, 6,000. Okay, please remember this is the cost. This is the contra asset accounts. For furniture, we call it as accumulated depreciation for furniture. So in our accounts, we have our asset accounts, furniture. Furniture, the balance is 25,000. 25,000. Okay. And then we have accumulated depreciation. Accumulated depreciation for furniture. Okay. The balance is 6,000. So if by looking at these two accounts, you know that you purchased this furniture originally at cost of 25,000. Cost 25,000. It already lost its values by 6,000. You assume that you lost the value by 6,000. So the net value or the carrying amount for this furniture is 25,000 minus 6,000, that gives you 19,000. So this is the current value, the net book value or the carrying amount for this asset, furniture. So in this question, it says that for this year, we are going to depreciate the value some more, that is by 2,000. So this will be your expense. This will be your expense. So I'm creating a new account. I call it as depreciation expense. This is our expenses for this year. How much is going to be the depreciation for this year? The depreciation for this year will be 2,000. Since this will reduce the value, so our accumulated depreciation we're going to credit by another 2,000. This is our expense. Expense increase debit, and the loss of value of furniture or asset we are going to credit. But we're not going to credit our furniture account. We have a special account, we call it as accumulated depreciation for furniture, 2,000. So this is where we already have the balance of 6,000. This is our current year. I'm going to put here depreciation expense. I'm going to put here accumulated depreciation account. So what is your cost of your furniture? Still 25,000. The balance CD is still 25,000. This is the cost of furniture when you purchase the assets. Okay. What is the value of depreciation that you lost in this year? The balance of your depreciation, your expense for this year is 2,000. Okay. However, the accumulated depreciation, the loss in value now increased. It's not 6,000. Now it increased to 8,000. So that's why our balance CD is 8,000. I believe you still remember when I put a calculation here. Originally, we have cost of furniture 25,000. This is the cost. The accumulated depreciation is 6,000. Okay. Before we make adjustment, we thought the value of this asset is 19,000, but we need to provide more depreciation. So this value of asset is not 19,000, it's 25,000. What is the value of accumulated depreciation? Is 8,000. I'm going to put a bracket here. So now the value of your furniture is only 17,000. Always remember that depreciation reduce asset value. Let me repeat again, depreciation reduce asset value. If you buy a car for 200,000 dirham, if you buy a car for 200,000 dirham, so you will not have that value forever. The value will drop, will reduce over time. Yeah. Okay, let me explain again. Yeah. In this question asks you your ability, your understanding on adjusting for depreciation, or adjusting for depreciation. Okay, what is depreciation? Depreciation is a type of expense incurred, yeah, by the business due to loss in value of its fixed asset or non-current assets. Previously, previously, sorry, we have assets of furniture with value of 25,000. Okay, when we purchase the assets, the cost of the furniture is 25,000, whereas we already calculated the depreciation, the accumulated depreciation is 6,000. So by comparing your assets and accumulated depreciation, you know that the net book value for furniture is only 19,000. And this year, you need to provide additional depreciation by 2,000. So what are the effect? This depreciation is an expense, as I mentioned before. So increase in the expense, you're going to debit by 2,000. Okay. And this amount will increase your accumulated depreciation by 2,000. So that is the reason why I credited accumulated depreciation account by 2,000. So the accumulated depreciation increase from 6,000 to 8,000. So how you're going to do this? How you're going to do this in your worksheet? So let me show you how you're going to do this. This is your worksheet. Yeah, let me use a different color for this transaction, blue maybe. You have accumulated depreciation here, 6,000. I'm crediting another 2,000. Show that you're able to see this 2,000. So my new balance will be, oops, not debit, it should be credit. Okay, this is a bit different from what we have before. Still remember, credit, debit. Sorry, credit mean plus, credit and credit, same side. So credit and credit, the answer should be credit 8,000. That is for furniture. And then we're going to have one new item here, depreciation expense for furniture. This is the credit and this one should be debit. So this one is 2,000. Okay, and the new balance will be 2,000 on the debit side. On the debit side, that is our new balance for depreciation of
Sir, I
furniture.
have a question. I'm confused about the
Okay, so what are the journal entries? It's going to be debit, depreciation expense, yeah, 2,000, credit, accumulated depreciation for furniture, another 2,000. Sorry, another 2,000. Let me move. Another 2,000. Okay. Okay, let us move to the next one. Yeah. Building was depreciated by 10,000. Building was depreciated by 10,000. So this will be our depreciation expense for this year. So how are we going to do this? If you look at your assets here, your building cost 200,000. The accumulated depreciation for this building is 30,000. So, okay, building, the cost is 200,000. Okay, the accumulated depreciation is 30,000. So if you look here, the net value of this asset is 170,000. This is what I mean by contra. You're going to minus this accumulated depreciation to get your book value of the assets. So in this question, it says that you're going to add more depreciation by 10,000. Okay. So this is your building accounts. Your building is still the same. The cost of the building is still the same, 200,000. This is cost you bought the assets. The accumulated depreciation amount that already depreciated, accumulated depreciation account is 30,000. 30,000. So now, yes, correct. You're going to increase that by another 10,000. So this accumulated depreciation, you're going to credit by another 10,000. So this will be your accumulated depreciation account. So it's going to be 40,000. Now the value of your asset is going to be 160,000. 160,000 instead of 180,000. So what are the accounts that we are going to prepare now is we are going to create one more account. We call it as depreciation expense. So this will go to your income statement. I'm going to debit here 10,000. 10,000. That is your, I call it as accumulated depreciation. So the answer will be debit depreciation spent by 10,000 and credit accumulated depreciation by another 10,000. Okay, debit depreciation expense by 10,000, credit accumulated depreciation by 10,000. Let us see how we are going to do that using our worksheet. Using our worksheet. Okay, our accumulated depreciation for building 30,000. I'm going to add another 10,000. So credit to add is to credit. So the new value now is 40,000. Okay. And then we have another new expense. Depreciation expense for building 10,000. So this is 10,000. Yeah, 10,000. What happened to the value of the building? The original cost 200,000 will be still be the same here, 200,000. Yeah, 200,000. So that is how we count for depreciation adjustment. We can have more assets, machines, building, vehicles. So the basic principle is the same. You're going to increase your depreciation, annual depreciation, and you're going to also increase your accumulated depreciation. So this is how we count for depreciations. Yeah,
I have a
depreciations.
question. I have a question. What is the book value and residual value?
Which one?
Book value, 1,60,000.
160,000. Yes. What does 160,000 mean? Okay, this is the
Yes.
cost of your building. This is your building. The cost is 200,000. This is your original cost when you purchase this building. Now the building has become old. You already minus the accumulated. You need to minus your accumulated depreciation by 40,000. So your asset value now is no more 100,000. It's going to be no more 200,000. It's going to be 160,000. And the
So,
end?
sir, we don't put it on adjustment trial balance, new cost.
The new cost. The new
Yes.
cost, we don't put the new cost. The cost is still the same, 200,000. The only thing changed is here, your accumulated depreciation. Your accumulated depreciation will increase over time. So the cost is still the same. When you tell me what is the story, yes, the cost, I purchased the building at cost of 200,000. Now after 4 years, the we already lost the depreciation of 40,000. The value now is 160,000. I repeat again, when we purchase the asset, the cost is 200,000. We paid 200,000. Now the value has depreciated by 40,000. Okay, the current market value, maybe the value now in our record is only 160,000.
Sir, I
160,000.
have one more question. I forget the meaning of residual value. Can you please explain it a little bit?
Okay, the
I forget.
residual value, Manu, I'm going to explain after this, okay? After I finish all this one.
Okay, okay, sir. Thank you. Thank
Okay,
you.
sure.